let me know let's get to know who you are, what you do, basically in real estate and how that can, impact our viewers basically.
Sure, sure. No problem. Uh, Irwin Boris. I work for Paycar Capital, which is a generational investor. We right now currently investing in industrial and shallow bay flex, although we've invested and owned and do own all asset classes. Multifamily, office, retail, hotel, and it's all about properties that can be held generationally, providing cash flow on a current basis. Um, and we're not betting on, internal rates of return or projected equity multiples because, we man makes plans and God laughs. So there's too much beyond your control when I know that I can capitalize the deal and generate 8 or 9% in the first year. I'm fairly confident that rents will continue to compound at some reasonable rate going forward. If I'm going in upside down, let's say it's a value add multifamily where you're buying on a 4.5 cap because you think it's a great deal, you're financing on a 6, and you got to bring all this
Yeah,
extra money and you need like a rocket launch. Things go wrong. You can't
true.
get materials, the contractor delays, there's a problem.
That's that's correct. That's correct. I was just, I was curious. The reason why I wanted us to have a conversation because, when created that video the video was titled "Don't Trust Zillow Hype." This triplex failed the deal test. My experience is quite of interesting because I've been in the market to see a lot of investors get burnt over and over and over and over. In fact, you won't believe this. Like I was on a call one time and this lady said, "Well, I'm moving fast and I skip due diligence and I skip inspection." And I was like, "How do you find that okay?" Like, how do you
It's
find that?
it's it's the boring stuff that really matters. And physical inspection, boring. Due diligence, it's boring. It's a bunch of numbers and papers, but that's where you're going to find things that are either going to support your thesis or tell you to walk away. And
Absolutely.
don't get caught up in the emotional part of the deal that, oh, I got this deal, I love it, that and you don't want to die because then you got nothing to talk about. It's better to walk away and say, you know what, I walked away for the right reason, and
Listen,
I live to fight another day. Than I did this deal, I was stupid. What are you going to tell people? That you skipped everything, you moved too fast, and you lost all your money and your investors' money?
Mm, great point. Great point. Now, one of the key things that, I'm going to read your response. You said here on that video, you said, "I've seen this play out too many times. Investors getting caught up in market momentum and skipping the fundamentals." You mentioned that a colleague just walked away from what looked like a solid deal until you guys stress test the numbers. Yes. And the cash flow evaporated under realistic assumptions. Your point about, so you're referring now to the video, your point about data-driven analysis hits hard. Tools that surface hidden risk early are invaluable for protecting capital. So give us like because viewers just think sometimes, they hear it
Right.
from me, they're like, "Jeff is just talking about this all the time. He likes to talk about the risk, 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 risk." Maybe because of my background. Tell me the story. What happened? Why? Yes, give.
No, you need to do it because what I noticed is that when this whole accredited investor, all these syndications really started to gather momentum. I don't know whether it was 2000, 10 or 11 or 12, somewhere at the beginning. The market was turning around. There's a big recovery,
Mm,
and there was a big discount because a lot of lenders sort of gave the stuff away, and they really shouldn't have. And it was really hard to screw up a deal and lose money. You had to really work extra hard because the momentum of deals always increasing in value and the artificially low interest rates and like no inflation, and so all the leaky boats came off the bottom of the ocean and started sailing.
true.
And then as interest rates started to move and expenses started to increase, and the supply chain really, with COVID, where you couldn't get vendors, you couldn't get materials, and if you could, there were delays, there were issues, there were cost overruns because you couldn't get, the contractor in. And I know people that were in the middle of hotel renovations and conversions. Then, all right, they didn't lose money, but they didn't really make any because of that.
Mm,
And so it's always, prudent to look at the assumptions and say, what is, they're telling me that they're underwriting, a 2% annual increase in operating expense. What happens if it's 4%? Because if you look at the fuel costs right now, because of oil, uh, it is about 4%. So what if my annual costs are 4% a year? What happens to the cash flow? What does that do to the projected multiple and projected IRR? It pretty much
mm,
eats into it. What if there's a slight recession because there's no job growth. Like AI, they say, is going to replace 30 million jobs in the next 5 years.
mm,
So don't tell me you're going to get, $250 on a renovated apartment. Let's assume you get 200. What does it look like if you only get 150?
mm,
So
mm,
do the stress test and figure out what your tolerance for pain is. The first question is when if you're going to invest in something based on pro forma, where there is no cash flow, is look at yourself in the mirror and say, can I afford to lose this money? Not can
mm,
I afford to not make money and break even, but can I afford to lose it and get nothing? Can I afford to lose it and have potential phantom income that I have to pay taxes on because there's a forgiveness of debt involved
mm, mm,
and
mm.
depreciation recapture? And I got to pay taxes on this phantom gain and I don't have any money for it. And I don't think anybody ever thinks of those two issues.
Yes,
They say, all right, I lost my money, but they don't think of the phantom income from depreciation recapture. Uh,
absolutely.
and that's why I want to know what the cash flow is in the first year or 2 years.
Mm,
And it's okay if I think I might be break even because there's a story behind the deal. Uh, sometimes, and I see this from time to time, current ownership, there's a death, it's an estate. There's, differences of opinions. They're undercapitalized, but it's the right property in the right location. And there's no reason they shouldn't be generating more income or have better occupancy. That's the only reason where I could see a purpose in going into a deal that's not fully occupied.
mm, mm,
Uh, I'd rather, buy in a secondary market where people need to be there. And that's why I like, the industrial and the shallow bay flex, because there's a reason that people are in those locations. Especially in shallow bay, the tenant can be, 2,500 square feet. They could be 10,000 feet. I,
mm.
I look at shallow bay as the multifamily of the industrial world. You might have,
Yeah.
150,000 square feet with 10 tenants. You might have 15 or 20 tenants in there.
Mm,
And they're there because they're too big for their garage. They don't want to work out of their basement. They need a place for equipment and tools and storage, a little
mm,
bit of office for someone to do the bookkeeping and book the appointments and order the materials. And they need the doors that open up so they can drive the trucks in and load out and go out on the calls for the day. Think of the air conditioner repairman, the plumber, the electrician, the guy who does painting, the sheetrock repairman,
mm.
electronic repairs, guys that fix TVs and air, things like that. There's a whole, these are in everybody's neighborhood and nobody ever thought, what's in that building there? I see all the garage doors. It's a long building with a whole bunch of doors and cars out in front. What do they do there? Everybody was so, I think, hypnotized, or maybe it's the right word is brainwashed, that residential, multifamily, Airbnb, single family homes, what was the way to do it.
Mm, mm.
That's why boring is better.
Hey, I agree 100%. Boring is better though. So let me ask you this question right now. You know what we do basically. We talk about risk
Sure.
transference. My background is I started off as an options trader. So options is more about risk transference. And I got into real estate and I understood the whole pain points. So I understand pain. I understand where investors are losing it hard. And I've been there before. So let me ask you this. What caught your attention around InvestFusion and or what we are doing in terms of looking at like you said, boring is better. What caught your attention about it?
I think that people have to understand risk no matter what the investment is, whether it's equities, whether it's options. We all could see the risk in Bitcoin with the way it's got like a roller coaster. and
Oh
all
my
that
God.
cryptocurrency.
Yes.
God, I remember when I should have bought Bitcoin. It was like dropped to 7,000 years ago, and someone said to me, "Oh, we're going to invest in a bunch of miners, and we're going to build this farm." And I'm
Mm.
like, I don't know anything about this. When it shot up to 120, I would have, or along the way. Sometimes you got to de-risk along the way, but that's the problem is everybody kept thinking it was going to go, going to go, going to
Yes.
go. And what a lot of investors don't realize, for every person that's making money, there got to be two or three that are losing.
Yes. Yes.
And so it's not just like everybody is making. It can't happen. There's a
Mm.
counterparty for everything. Just like whether it's an option contract or any kind of derivative or even an interest rate cap you're buying that you might need for your real estate loan. Somebody's
Mm.
taking that risk.
True.
And I remember, I don't know, 6 years ago when we first converted from LIBOR to SOFR, and SOFR was nothing. And we did some loans with a bank,
Mm.
and they only required that you take a 2-year interest rate cap. And the cap was so cheap that we took 7-year caps because it was only marginally more money. Now, what if I thought rates were going to rise? You know what? I'm laughing right now. My counterparty is crying.
Oh my
And,
God.
and we had an institutional partner on that one years ago. And they said, look, why are you guys wasting the other $65,000 on the full term cap if you only need to buy 2 years? And we said to them, because we like to sleep at night. And so when interest rates started to rise, they kept telling how all their other friends and colleagues in the institutional world, how smart they were. That was
Mm.
their decision. I'm like, you want to tell people that? God bless you. We all know what the story is.
Exactly. Crazy. That's so real. Like literally, that's so real.
But it's
Um,
all about risk. And
yes.
I guess if you're a younger investor and you're starting out and you're in your 20s and you know what your income is and your job is secured, you have money in the bank to cover a couple of months of unemployment, God forbid, and you know what your rent is and you have some extra money and you want to take some risk, that's the time to take the risk. As people
True.
get older and you start to have families and you're building long term, you have kids, you're looking for retirement, you're saving for college, you got to be learning to become more risk adverse.
Exactly.
I'm not willing to risk principal on
Mm.
any investment. I'm willing
Mm.
to take some risk
Mm.
on the profit, but I
Okay.
want to know that there's cash flow all along.
Mm. Mm.
So, Goff, let's say I couldn't move the rents and I only got 6 or 7% for 5 or 7 years, and I sold it for my base. It's not so terrible. I got the depreciation. I
Mm.
1031 into something else. I didn't have the depreciation recapture, and I
Mm.
beat the bond rate.
Mm.
Not what I'm looking to do with real estate, but you know what? It could have been a lot worse. And
True.
and and, and so that's how sort of I look at the risk. And even when I talk to investors, a lot of them, especially now, are running from multifamily because of capital calls and deals going under and are not performing. And even I have a few investors lately who have been selling portfolios of single family homes or condos and things like that because the cash flow isn't there anymore. The maintenance costs are going up. It's hard to manage. The management companies that manage these single family homes charge too much
Mm.
because they can.
Mm.
That now they're trying to learn about industrial, and I have to explain to them you can't underwrite it like an apartment building. I have to slowly be
Exactly.
patient and walk them through the process.
Mm.
And I have investors come back for three, four, five times on transactions. Uh, no one reads the financial statements, even though I sent them out monthly. It's actually the first time I sent them out. Uh, Somebody, actually one of the principals of the company said to me, "What did you send?" I said, "That's the monthly financial statement for the reporting state package." "What is it? I've never seen something like this." I said, You've been investing, 25, 30 years." He goes, "Yeah, something, every quarter we get a P&L and some rent rolls." I'm like, I don't know who your partners are. So I had to make them toe the line.
Mm.
He says, "What's in here?" And even some
Mm.
investors every once in a while. I said, "You are a partner, whether you're a limited partner, general partner, whatever, you're an owner.
Mm.
You are supposed to get this on a monthly basis. It
True.
has a balance sheet, which shows you the assets and the liabilities. It's an income statement, shows you all the income, all the expenses. You have a general ledger to show you what all the accounting entries have been, recording that. You get, the accounts receivable, the accounts payable, you get a rent roll, and we also give you a copy of the bank account so you see that where the cash is. And they're like, wow, that's pretty complete. They said, now tell me, what do I really need to focus on? I said, just read the email. If there's something newsworthy, it'll be right in the
Mm.
body of the email in the first paragraph. If I tell you that, we're 100% occupied and there are no leases expiring for the next 2 years, you should say, hooray. You know, that's all you got to worry about.
Exactly. Oh man.
If something happens in the interim, a tenant that's going out of business, there's a bankruptcy, there's a fire, we'll send out an interim email saying, hey, this is what it is. We're working with insurance. I
Mm.
don't want you to read it on the 6 o'clock news and call me. Uh, and so I find that, transparency is also important in
True.
helping people understand risk.
True. 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 There is a recent report. I don't know if you saw that report by Redfin. So Redfin did a deep analysis on what's happening in the markets right now in the US. In their report, they mentioned that over 40,000 buyers purchase agreements gets canceled every year when buyers go on contracts. Now, incidentally, that represents over 16.3% of the entire pool of deals in the US market that collapses. In
Yeah,
dollar
but
terms,
Redfin is really focused on residential, though.
yes, residential,
But
correct.
yeah, there's a lot of people that can't get financing. There are things that are found on, home inspections that, sellers don't want to address.
Mm,
Uh, now with interest rate fluctuate, people are actually trying to manage their own risk as a buyer and saying, wow, interest rates, look at it's going to cost us. We don't want to be that tight.
mm,
And unfortunately, you can't build uh, new old looking housing or whatever the expression is, or
yes,
because of the construction costs. It's the same in
yes.
multifamily to build affordable apartments. Unless I could figure out how to way to stack 400 shipping containers that are and figure out how to you know and people that there are a couple of firms that have sort of figured out how to build these things at 30-40% discounts to actual ground up construction by buying these office buildings. But
Mm,
still, they're looking to maximize the profit. They're not renting the apartments at
yes,
more affordable rates because they could. They're just looking to make more money. So,
absolutely.
unfortunately, you can't really say it's a government issue
Mm,
because we're in a capitalist society, but we do need to figure out how to address affordability so people have a place to live. Not everyone's going to want to own a home anyway. God knows when I
hmm
know what my house is costing me now, I wish I never bought it. I would have better off renting. Uh, it's a money pit, but
mm, mm,
that's a story for another episode. Uh, but even by changing zoning, so even the affordable developers are profit motivated.
true, true.
And the government can't work efficiently, so we can't
Mm,
depend on, federal or state or local government to build houses. Uh, it's almost as if you need, like sort of a habitat for humanity on a grandeur scale, where people are going to donate their time and swing a hammer and help make these things. And yeah, there are people that are very good natured to try to help,
mm.
whether with their time. God, all my kids worked on some of these homes and still do once in a while.
Okay,
Uh,
wonderful.
but there isn't enough that can be done fast enough.
Mm,
And
mm,
so uh, I think that's, a big problem here. It hurts uh, growth in some cities
hmm
because people can't move in. And I think it's further compounded by, immigration. People
mm.
come here with nothing. Where do they live? Uh, it- you know, my grandmother tells me the story that when she came here many years ago, uh, back then, and she was actually deported 3 times before got here legally,
Oh,
you know,
wow.
but she said nobody. there was no hotel rooms, there was no vouchers, there was no medical care. You came here because you had family that were here or close friends that were here that took you in, helped you get on your feet, and you
mm,
worked.
mm.
And Beverly. So let me just tell my mother I will call her back.
It's
Send
okay.
her, I'll just tell her a quick message. I'm on another call. There we go. No, she'll be 87. So
Oh wow.
but she's fine. Uh, she so they tell this story and for people to come here and expect to have a handout and for us to actually give it to people sends the wrong message.
Mm.
But that's more philosophical. We won't even talk about that. But I think that really adds to the investing risk
True.
in a lot of aspects. That who's in the neighborhood, what are the influxes, what is demands on the systems that surround your buildings, and
Mm,
how does it influence your investment? Yeah, it's great for our economy because whether they're here legally or illegally or they're not, they're spending money.
mm, mm, mm,
So it's good for businesses that sell food, clothing, things
mm,
like that.
mm.
Uh, but it does tax the school system, it taxes the welfare system, it taxes the medical system, I think
Makes sense.
unfairly. But
Makes
no,
sense.
at this point in my life, I'll be 65 in July, and it's
Oh,
all about managing risk.
congratulations. Yeah,
Thank you. All about managing risk, not
true.
only investment risk, but health risk. And it's you're going to make decisions that are going to benefit you,
Absolutely. Absolutely.
and your family.
Hmm.
And because if you don't look out for yourself, sure, no one else is going to. Uh, and you really have to when you talk to people, especially if you might think about investing with them, whether it's an investment advisor on a security or options or a fund or it's real estate sponsor, you really have to get a good feeling that the interests are aligned. It's like you want
Mm.
to know that they profit when you profit.
Profits. Yep.
That's and actually, I heard who did I hear speak this morning on Bloomberg Radio? Hang on, because I want to. Andy Spector. He's
Uh,
the CEO of Fiduciary Trust.
Fiduciary, okay.
Yes, and he was talking about how to multi-generational families. How does the money disappear?
Mm,
Or even and he talked about some of his clients are new first generation money where they were startups at technology and they made the money. Some are on the fifth and sixth generation, old money. And he says it's all about education and it's making sure that the interests are aligned.
mm,
That even with athletes, they get misled
mm.
because the motivation and incentives aren't aligned. And that's why I tell my investors that we have sufficient skin in the game. You could see that when, we're not making money when we close the deal.
Mm,
Everyone says, well, what about the fee you get? I'm like, I'll tell you about what the fee goes for. I said, the fee goes for all the deals that don't close that I don't ask you to contribute to because you were going to invest in it. The deal dies. It goes
mm,
for all the legal fees and all the due diligence costs and all the people that were involved on deals
mm,
that die. It's not a profit center.
mm, mm, mm,
Uh, and then they think about, yeah, we like this deal. You didn't close, you didn't close. So they get it. Uh, but that we also typically put sometimes up to 20 or 25% of our own money in every deal. So
mm.
it's not like I raised, $400 million in a fund and it's 100% OPM.
Mm-hmm. Mm-hmm.
And there are enough of those guys out there too,
Exactly.
where it's all about the promote and the asset management fee.
That makes
Um,
sense. Yeah.
so, as an investor, as part of managing your risk, I think you really need to make sure that whoever you're investing with, no matter what it is, that you both profit together or you both don't make money together.
Hey, absolutely. 100%. Yeah, I'm with you on that. I'm with you on that. Now, a lot of our viewers are basically new investors. You come across these investors who are just beginning in the game. They don't really know anything. They like ask questions. They don't even know the basics of real estate. And so you've been in this game for some time. You experience in this market. What would be
That's why I
your
have no hair anymore. Sure.
You're funny. So, what would be your advice for our viewers who are just beginning into real estate? What would they get started with? How would you guide them? What would be the path? What path would you take if you're going to go back into when you were 20 or 30 years old? get into this real estate? What would you do?
Well, I think they need to understand the basic concepts of investing in real estate. There are different asset classes, whether they're gonna buy single family homes or small apartment buildings, 2 or 4 or 6 family, or a retail store. They got to think, how hard is it to keep it full? How hard is it to manage it?
True.
If it's a property that has one tenant, that tenant moves out or disappears or doesn't pay their rent for a couple months, you got to pay that mortgage.
Yes.
I think they should make sure that they're putting some money in a deal, but make sure it's a deal that a lot of other people are investing in, and find out, how many, talk to some of the other investors that are investing in there. How many deals have you done with this sponsor? What do you
Mm-hmm.
like? I think they should go to conferences and just see what ideas people are throwing around. There's
Mm-hmm.
enough material out there. The internet is dangerous though, so you got to be everything you read with a grain of salt. There's all sorts of psychology behind marketing and
Mm-hmm.
influence, and so you got to really be careful of what people are telling you. You don't want to get sort of like hypnotized and sucked in. Um, but start with there are like books you could read, like even the uh, real estate licensing books that you have to, for that 90 hours. There's a
Yes.
salesperson's book and there's a brokerage book.
Mm-hmm.
And they talk about the principles of investment and, and return of cash and internal rate of return and equity multiples and basic underwriting formulas. And there are all sorts of, these days, especially with artificial intelligence. I could take an offering memo and drop it into Claude, and with the right prompts, it'll tell me, you know, the sponsor only underwrote with 1% expense growth. Red flag, things like that. If you ask
Yeah.
the right ask it to look for the right answers, it will tell you what it found.
Yes.
Uh, you should also decide whether you need current cash flow or you're
Mm-hmm.
going to be a total return investor and bet on the back end. I think at first you should look for deals that generate current cash flow,
True.
because that will give you more confidence in yourself and make you more comfortable that you're getting something every quarter or every month whenever they're distributed, and you
Mm-hmm.
can see how it works. And also read the financial statements when you get them, because over time you will see patterns.
Mm-hmm.
And when you get the financial statements, hopefully they're giving you, a trailing, 12 months, where at the end of the year you're seeing 12 months and you can see how everything goes up and down. If not, put it together
Exactly.
yourself,
Mm.
make your own. And this way it will help you learn more about certain types of real estate that might have some cyclicality to them. Like in apartments, there are certain seasons that are better for renting,
True.
as far as leasing, because some that aren't. Like things get slow towards the cold weather, sort of like from November 1st till March. If there are vacant units, they sort of stay vacant
Mm-hmm.
because no one wants to go look for an apartment when it's cold out. And so you will understand these patterns. Um, and then, look at different asset classes, but really go to conferences, go to meetups, just, see what other people are talking about. And if you need help, there are people out there that will help you, that
Mm.
aren't looking to sell you a deal or
Mm.
have you invest, just trying to help you, educate yourself.
True. True. That's absolutely, you hit the nail on the head there, right there, because investors really need to get more. They need to stay informed. Information is king here, and the more they know, the more they are aware. It gets better with time to define. Okay, what asset class fits my own investment goals? Like you said before, risk aversion, risk appetite. It comes in the game as someone gets older, wiser, and yeah. So that's fine. So before we conclude, what would you say finally to investors who are listening now, those who are more experienced, who understands various game being played in the market right now? What would you say is the direction to go to that might avoid major bottlenecks, in the pipeline for you guys right now?
I would say, we're sort of like in uncharted territory with the current administration.
Mm.
I don't know whether to, accuse the president of stock manipulation, you know, because he sees the stock market go down, so he comes out with something, and the stock market goes up, and then it doesn't happen, the stock market goes down again. So that's how he judges his popularity.
Oh my
Uh,
God.
and so I would say bet more on cash flow. There
Mm.
are certain opportunities that I have seen that I think, if you have some risk capital and some tolerance for risk. Like this, somebody I know is actually working on a five-star hotel up in Vermont, and I had the opportunity to really walk the property, and he says, "Well, tell
Mm,
me what you think." And I'm reading the market studies, and I'm like, I'm trying to figure out what's wrong. Why didn't anybody do this yet? And he's such a conservative person that when he put together his pro forma, like he left out the real estate tax abatement he's negotiating because he says, I don't have it yet. I'm not going to include it.
mm.
There are all sorts of like state and local job training, job credit money you can get, especially you can open a
Yes.
hotel that
Yes.
really reduce your payroll costs.
Mm.
He says the money's there, forget we have it. And he goes, those are good talking points when we actually talk to a potential investor. We can talk about all these things, but because the tax abatement isn't signed yet, and we're not open for business can actually apply for these benefits, I don't want to include them.
Mm.
And I'm like, God, I said, you're like contrary to every other real estate developer that's out there. They want to sell you a lunar eclipse and
Yes. Yes. So true. So true.
so there are some people out there that are conservative, and I think that one I really like that I might look at it for myself.
Mm.
Uh,
Okay. Okay.
but I would say there are a lot of interesting opportunities out there. I'm always going to be a cash flow investor because I'll tell you, it's always nice to get those, open up your bank account, every quarter. Oh, I got extra money. Where'd the money come from? Oh yeah, look at all the distributions that came in. It's like,
I love cash flow too. I love cash flow. Cash flow equity. I'm in the game for both. I'm in the game for both.
yeah.
And that's why, yeah, that's why we built a platform that identifies that in real time. But really appreciate your insight. It's so fun just discussing this with you. Hopefully, some other time again we'll get a lighter schedule and then we can, just see how the market is going and where you guys are. I think a lot of investors too need to understand that investing into capital like your own capital, for example, you need to trust and love the people behind the game who are really involved in helping your money grow. Because as you know, there is a world out there where investors don't really have that time. So they need experts who have the time, who have the love for the game. And I can feel your love for what you're doing and helping invest because it's a wide market out there. And
No, it is a wide market, and that's it's one thing. It's like every people always have like some investment managers always have like an investor relations person, and I once saw something interesting that someone was marketing, and I said, I want to find out more information. I knew they had a lot of deals in trouble, and I wanted to hear what the story was because
mm,
I looked up the properties. They already own them, but they're raising equity for them, so it's a red flag. And I
mm,
get on the phone with this young person. And my first question was, well, I know you understand you have like 8 or 10 deals that I've heard are making current distributions. I said, what have you learned over the last couple of years? And the answer was, I expected him to say, well, we should be more conservative. We should use fixed rate debt. We should assume operating expenses are going to go up. No, the answer was we need to have container loads of supply so we can renovate apartments faster. That was the answer. And I'm like, oh God. I said, I'm never going to hire an investor relations person. I said, I like to talk to people, and I
right.
think it's important for an investor to talk to somebody that's actually in the weeds and can
Absolutely.
give you an answer real time what's going on rather than let me check and get back to you. That doesn't build confidence, not at all.
Mm.
And so I have like some a lot of medical professionals who call me at nights and on weekends, and they tell
Mm.
me, look, can you do Thursday night at 8 o'clock? And I'm like, sure. They tell me in advance, and it's just so much easier to give them real time, to give them confidence, because a lot of them have turned around and brought a friend or a colleague or a
That's right.
relative. So
That's right.
so
That's right. Referrals.
it's
Yeah.
all about building trust.
True, true. Trust is the game. Trust is the game. Trust is the game. I appreciate your time so much, Irwin. I know this we've spent a few a few time this morning, but thank you so much for finding time to meet with me and then just discuss this just for education because we're providing education to the public and helping those new investors who are just getting out started in the game to know okay directions to go into and what to do. So thank you so much. I look forward to having meeting with you again some other time in the future and then see what we can do. But thanks so much again. Any parting message for our viewers before we go?
No, if anybody wants to learn around about, shallow bay flex or multi-tenant industrial, feel free to reach out. You can just put my name in the search bar at Google and you'll find
Exactly.
me.
Yes.
And or else you can follow me on LinkedIn. I'm posting 2, 3 times a day about what I'm seeing and what I like, what I don't like, and what I think the advantages are.
Mhm.
And if you have any questions, shoot me an email.
That's it. That's it. Thank you so much, Nas. Now, for our viewers, you've heard him. So we're going to leave this video out for them to watch and ask questions. They can reach out to you on LinkedIn as well. Thank you so much, and thank you so. Bye for now, man.
That's great. Thanks, Jeff.
Yeah. Bye.